You've graduated from college, excited about your future, but then reality sets in as you find yourself drowning in student loan debt. It's like being lost in a labyrinth, trying to figure out how to navigate the intricacies of student loan payoff negotiation. But fear not, for in today's guide, we'll decode the secrets to help you find your way out of this financial enigma. So let's get started. Navigating private student loan settlements can be complicated, as these loans do not offer the same government-backed repayment plans and forgiveness options as federal loans. Instead, your negotiation power largely depends on the specific terms of your agreement with the lender. When negotiating settlements with private lenders, you'll find that private lenders are only open to discussing settlements if your loan is in default, meaning you've missed payments for around 120 days or more. This might seem counterintuitive, but think about it from their perspective. Once borrowers default on their repayments, they're seen as high risk. At this point, some lenders may prefer getting back part of what's owed rather than nothing at all. But how does default affect your ability to negotiate? If you're grappling with defaulted student loans and thinking about negotiating for a payoff or seeking help from debt settlement companies, keep in mind every situation is unique. Your success will hinge upon factors like how severe your current financial hardship is, whether there's enough cash saved up for a lump sum payment, and if the lender has initiated wage garnishment. The silver lining here? Being in default could give you an edge during negotiations because now receiving something instead of nothing seems a better option for them. But tread carefully. Navigating these waters requires careful planning plus understanding potential risks, such as the impact on credit score, among others. On the other hand, federal student loans come with many options to assist borrowers. These strategies can make your loan payments more manageable and less burdensome. The Department of Education has crafted several repayment programs aimed at helping you manage your federal student loan debt effectively. One such program is the Income-Driven Repayment Plan. This program considers salary and household size to work out monthly payments, thus making it easier for those with money troubles. An alternative option could be the Pay-as-you-earn plan, which caps monthly payments at 10% discretionary income, thus providing relief if you're struggling to keep up with higher amounts due each month. These plans are often lifesavers for individuals grappling with a high debt-to-income ratio, as they significantly lower required payouts. If managing multiple federal loans seems overwhelming or complex, consider a consolidation strategy. Consolidating all existing debts into one new entity comes with its own interest rate terms, potentially lowering the overall payout by extending the repayment term to 30 years, depending on the total education indebtedness incurred. This approach simplifies the management process, while also unlocking eligibility towards other beneficial alternatives that might not have been accessible earlier owing to type restrictions imposed by the original lenders. However, remember that consolidating does lead to an increase in the total cost over time because a longer term equates to paying out more interest. The first step is assembling all relevant documentation related to your defaulted loans. This includes everything from statements detailing your current loan balance and payment history to any correspondence between you and the lender or collection agency. With documents in hand, reach out to your servicer or collections agency. Ensure you equip yourself by researching viable negotiation options. Just as climbers study different routes before embarking on their expedition, understanding various settlement options, including lump sum settlements and long-term income-driven repayments, is a crucial part of preparing for negotiations. Devise a proposal plan aimed at settling the remaining principal owed. Much like plotting the final climb route based on weather conditions and physical fitness levels, this should detail how much one can afford to pay back, considering financial hardship circumstances if they exist. Afterwards, submit the plan supported by documents like pay stubs to demonstrate income levels and regular expenses. This will assure lenders of the capacity to consistently make the agreed-on monthly payments without further defaults during the stipulated period. Successful debt settlement largely depends upon presenting a strong case convincing private lenders of the borrower's commitment to fulfilling obligations under the new agreement. The perks? First, negotiating can reduce what you owe on those pesky federal or private student loans. Avoiding wage garnishment or aggressive collection tactics usually associated with defaulted student loans is another plus point. You will ditch monthly payment stress to focus more on building wealth. All things considered, there are some drawbacks. A lump sum payment upfront could be an obstacle for many borrowers, since these settlements typically require immediate funds availability. Your credit score might also take some hits because settled debts often get reported as paid less rather than paid in full. This distinction may seem minor but has significant implications for future borrowing capabilities. Last, there are tax implications arising from forgiven amounts that the IRS might classify as taxable income. So, weigh the pros and cons carefully before choosing any action. If you're unable to reach a settlement agreement on your student loan debt, don't lose hope. There are other avenues. You can consider consolidating existing liabilities into one single entity, refinance private student loans, or get temporary relief from loan payments by applying for deferment or forbearance options offered by lenders. However, these should be considered a last resort, since they only suspend obligations temporarily while accruing additional interest during the pause period. If things get too complex, don't hesitate to seek professional help from the ASCENT Network. For expert guidance on student loan payoff negotiations, contact ASCENT Network toll-free at 1-877-871-2400. Like and subscribe for more valuable content, and I'll see you in the next video.